All right, hello, Brad. Welcome back to the other 1000 days challenge. This is day 551, so let's get things started. All right, what I mentioned yesterday, I did have a couple of stop losses trigger actually the day before. So my main trading account, we can see the drop over here. And in terms of experimental trades that I did enter, two trades that actually went in terms of loss and one in terms of break even and stuff like that. So again, these have been updated. So currently right now, I'm not in any trade. So day trading, I'm still looking for potential setup, but not too much. I do lean towards further bearish momentum downside, at least for the short term wise. But yeah, like within the day trading wise, I do lean towards some bearish momentum. But if you look towards maybe the week or the swing trade wise, I do see potential long side trade. But let's see how things goes. So overall on the S&P 500 or US market in general, we do have a very nice continuation bounce yesterday. In fact, the S&P 500 once again break above the 150 simple moving average on the daily chart itself, which is a very good sign. But of course, on the 4-hour chart, you do see potential resistance at this region itself. Previously acted as support, and then now actually breached the support. So now it's a potential resistance on the 4-hour chart itself. So that's definitely an interesting point to look, especially on the tonight perspective when the market opens. And moving on the NASDAQ itself, we do see potential, current resistance right now at the 200-day simple moving average. Definitely a key point of interest to be looked into. So even if we do face some sort of retracement and pullback, I wouldn't be negatively bearish as long as you don't have a strong red bearish candlestick. And in fact, we also have a potential MACD crossover to the bullish territory, which is actually also a good sign for a bullish continuation pattern itself. And on the other hand, for AHR, it's still a very considered weak bounce on the critical support region, something that you do not want to see, especially if you're leaning towards the bullish momentum side of things. You want it to be something like this and then a very quick bounce right back up. But it's not happening right now. So definitely lean towards potential further downside, especially if we do stay below the 20 exponential moving average on the daily chart. And then for KWAB, fortunately, we did stay above the 20 exponential moving average. But like I mentioned, we are still forming lower highs and lower lows. So to have a confirmation of a change in the bullish reversal itself, we definitely need a strong break of these lower lows to form a lower high formation. And we also need to break above the 50 simple moving average and also stay above it. So something like this, but we definitely cannot be like a weak test and then fall back down right again. So yep, something to take note of. And finally, for Bitcoin itself, so like what I mentioned yesterday, I'm still waiting for a clear retest of the 20 exponential moving average like I mentioned yesterday, and it seems that we have. So the high of yesterday was 39.28K, and you can see that the 20 exponential average was 39.33, yeah, by 3K itself. So I will consider this as a official, there is a test being done on the 20 exponential moving average, similar to what you see over this day. So if we do break over here strongly over today itself, I do lean towards much further bearish momentum. But for me to enter a short, what I look at the 4-hour chart is over here. We have an upslope trend line. We also have this 50 simple moving average. For me to convincingly enter a short, I want it to break over here. And a short setup will be somewhere along here. It has to close right below it, in my opinion. And then this will be a potential short setup that you could be looking into. Yeah. Otherwise, that's more or less about it. If you guys have any questions, feel free to drop by your comments below. Otherwise, that's about it. And I'll see you guys tomorrow. Take care. Bye-bye.